are back and Robin's with us. Yay! Welcome, Robin, again. Thanks for joining us.
Absolutely. I'm love to be here. It's, I think, the most relaxed content creation I ever did. I sit here with my shirt and have some pumpkin soup. So I'm looking forward to Bitcoin.
Yeah. This is an easy one for, well, as Daniel and I have known for a long time, there are days there are weeks where I will be reading up on news and studying stuff and have some ideas. And at one point I would make agendas. And then there were days or weeks where I have no idea, but once we're going, there is so much we just fall into. All roads lead back to Bitcoin. Lately, it seems like all roads lead back to
BIP 110,
which I almost don't want to talk about because it's like, no, not BIP 110.
But, morning, Johnny. Always good to see you, sir. I hope you're on the mend.
Yeah, mending steadily. I was also this week studying, I was listening to a couple of podcasts and reading stuff about the Roman Empire and how I was like, all roads lead back to the Roman Empire. And somehow that bounced me into Praxeology, which Ludwig von Mises had written a lot about. And a lot of his Austrian economic theory was around Praxeology and human incentives, human action. It made me think about what all was going on in Rome when we imagine what led to the rise and the Republic and then the empire and the fall. If you the fall, if you call it the fall, it was a steady thing. East versus Byzantine, it's all different. But
yeah,
I was thinking about human incentives. It made me think about core versus knots, the human incentives, what actions are happening, what people want, and so how they behave, and then the fire and popcorn show looming that everybody's like wondering about and talking about. And anyway, all roads lead back to Praxeology.
Bitcoin.
I don't know. I had never heard of Praxeology till
really?
I guess I saw Knut Sandholm's
Knut
Sandholm's book called Praxeology. I had that up here somewhere. Oh, maybe not. Oh, well, never mind. I don't have it ready, but he wrote a book called Praxeology. And when I first saw that word, I was like, oh, that sounds complicated and sciencey. And but I want to learn more about Praxeology now.
Yeah. Well, I read Human Action when I was like 16, dude. Like that. Yeah. I mean, like I said, my dad was like a hardcore libertarian, dude. He was all about the Austrian school. He was all about all of this shit. So it was, it's fun to watch people kind of come into this world. Like Larry Lepard actually said once, like he was talking about gold in the 70s, right? Like, you should get gold and blah, blah, blah. And people just wrote him off as a crank, right? But like all through the 80s and 90s, I was talking about gold and you should have gold and it's this hard money and blah, blah, blah. And I was a crank, right? But like even in the 2000s, I'll never forget, I was talking to my friend who was a big stock investor at the time. And I was like, this is all going to zero. The fucking fiat system is going to collapse. You need to get into gold. You should sell all your stocks right now. My friend was like, you're crazy, dude. These stocks are going up like fucking gangbusters. Why would I ever sell any of this stuff? I'm like, because it's a house of cards. But this is in 2000, right? And so by the time the financial crisis rolled around, like my friend had done something like 600% gains in the stock market or something like that. I was sitting on the sidelines with my little bag of gold and silver, just like, no, I didn't make no money. So all I really did, and then even after 2008, I was going around telling people like, hey, you should, buy silver, you should buy gold, blah, blah, blah. That's when I started looking into Bitcoin, 2010, like when my dad died. But that whole time I missed out on all the stock market gains too. Like I was just like, oh, I'd rather sit on the sidelines and talk about and just sit there chicken littling about how the sky is falling and everything's going to break down tomorrow and look at how crazy this all is and yada, yada, yada. But meanwhile, it's like all I did was miss out on 20 or 30 years of stock market gains and drove myself into the ground trying to convince people that everything was about to end when clearly it wasn't. Clearly it didn't. Clearly it hasn't.
I did the same thing in 2000 because I'd left Microsoft for quasi pissed off reasons but joined a .com that then flamed out. And back then I'm like, all of this stuff is such garbage, and the incentives are so off, and it's all this bubble stuff. The Dow shouldn't be above 10,000. It just,
Right.
and it's like the Dow should not be above 10,000. It went to like 11 and 12. And I was like, I sold out. I was just like, I'm done. And that's kind of when I shifted over to gold. And it's like in the 50s now, but those incentives in that game didn't end. There were
No.
just bubbles and other things
Yeah.
and other wealth finding a home. So
Right. Yeah, but that's all it's ever been. Like for the last 12,000 years, that's always the case, you know. So like you can sit around and fret about all the horrible things that are about to happen that you can't really know are going to happen, and try and predict all the horrible things that are going to happen, or you can just kind of deal with the reality that you live in. And you know, now that I'm finally old, maybe even wise, like yeah, the numbers are absolutely surreal now. You know, like what is the Dow up to? Like 40K or some crazy shit like that. Like
52.
get the fuck out of here. 52?
It closed. I just had to look it up. Friday, July 10th closed at 52,709.
Holy smokes. So
Which,
you would like just if you zoom this chart out, right? Like if you go on the monthly timeline and just look at this chart, like I'm going to share this chart because it's so much fun. Like this is the fucking Dow, dude. Like I can't believe it's 52. That boggles my mind. Like,
yeah, I'm like, what? Well, people talk about P&E and all that, and I mean, none of it makes any sense. But I know,
mean,
yeah.
So if you go back to prehistory, there, like 1897, right? You can see right up to 1970, and like people have pointed out, gee, what happened in 1970? It's like, well, some pretty big things. But I would point out though, is like if you kind of zoom back in over here, you go, what happened here? And so people will point to this like huge spike and go, because of 1970. But I would go, well, what about that spike that just got flattened out because you had the chart zoomed out, you know? So it's like all of this was occurring, but this was like we're entering into financial collapse territory, right? Like this was like the last big risk of an actual collapse in the system prior to 2001 or 2008. I mean, so it's like it's always been debasements. You know, people say, "Oh, the gold standard regulated." It's like, no, it didn't. Like they just oversimplify things and they just make it like, "Oh, this is all because gold and gold fixed everything." It's like, well, maybe it was more because we had the reserve currency of the world and we were debasing the shit out of it so we could fund little adventures in Korea and Vietnam. And it wasn't until that balance of accounts became so egregiously strained that someone went, we can't do this. Like, we can't redeem all these claims. Like, there's more claims than gold, obviously. So you can't have our gold. Go fuck yourself, right? Like, that was, but it was occurring all the way up to the moment where they officially did it. It's just, and so everyone points to like that moment. They go, this was the thing that broke everything. I'm like, no, it was quite literally like 2 years after World War II, they already broke it, right? Like it wasn't like this thing just magically, like everything was working great until Nixon just decided to just pull the plug for no reason whatsoever. It's like, no, they started breaking it the second they realized, like, wait, we control all of the money in the world? Yes. Well, fuck yeah, let's go build shit. You know, let's make the GI Bill. Let's go build houses. Let's, just debt. Let's launch some more wars. Let's do some more shit. Let's put a man on the moon. What the hell? Just fucking spend the money. Like everyone else has to pay for it. We don't have to put the bill. And so, like to say that, the 71 Nixon gold shock was like some sort of watershed moment. It's like, no, that was just the final straw on a thing that had been building for 30 years. Yeah, exactly. So,
yeah, and initially the narrative that I remember here, well, I wasn't alive, but that I remember hearing about was like, okay, it's not technically backed directly. You can't get your gold, but we're going to keep it pegged. We're going to keep it pretty well pegged. There'll just be a little bit extra on top, but it just ran away. It just started running away.
Yeah. I mean, it was the Nixon oopsie, right? But I mean, it was like a year later, that guy was like getting on a helicopter and just kind of flying off. Just like, I quit. See ya, or 2-3 years later, I guess. So, I mean, what a weird time.
The thing you said in the beginning, I think also was really spot on with with just the things going up. Like you need this for people to actually adopt something. We always say like, oh, like why don't we have Bitcoin adoption? Why are not more people coming into Bitcoin? It's because right now it's not going up. I'm sure if we jump up to like 250K within the next, I don't know, 18, 20 months or something like that, we will getting a lot of new people. We will get a lot of people. We'll get celebrities talking about it. We get new people coming in. The uncle of yours will contact you. The cousin of yours will contact you. So like all of this happens because number goes up, because nobody wants to miss out. I remember my sister saying it to me. I might have mentioned it before. She's into Bitcoin because she doesn't want to look at me being very wealthy in like 20 years and known like that she has missed out. So it's like, that's her whole reason why she's owning Bitcoin. And I think a lot of people are those social creatures that say, hey, I don't want that everyone is getting wealthy except me. And so if something goes up, if something is really, really like on a rise, if it goes like Bitcoin is now, let's say, I think like 64K or something, and it goes in the next month to 70K, then to 80K, then to 90K, then to 100, 150, 200K. At that rise, people see it and they see it at like 90K and they're like, oh, it's almost back at the all-time high. They forget about it. They check back in like 6 months later and they're like, holy cow, it's at 200K now. What the fuck happened? I need to buy as much as I can right now. And this is the time where all again crashes down again and they're losing money because they buy the top and sell the bottom as all good traders do. But it's that number go up thing that gets people in, nothing else. Like I like to think that maybe I orange pilled one or two people with the podcast, but actually not, because they came in because of the price and they looked at my podcast and they're like, okay, I'll actually buy it. But the top of the funnel is always the price action, the human greed, it's really rarely the freedom technology. It's really rarely anything else. It's probably like 98% of people come in because they want to get rich, they want to get wealthy. They see a number go up and they're like, oh, I want to be in this.
Yeah, exactly. Which is why Dogecoin and Dog with Hat and, all these other dumb coins, like all those things are because number go up really fast. And people, like they hear the handful of stories of the people that made a lot of money in a short amount of time and they go, I want that. But all people are really looking for is like an escape from fiat debasement, right? Like they don't even realize it. Like, so like if you but there's that thing with like the lottery winners. Like if you look at lottery winners, they're universally fucking miserable after they win the lottery, right? Like,
Robin, are you done growing?
Have you finished your growth spurt yet?
Maybe. I don't want to spoil the poly market bet.
Yeah, he's still eating his bananas and that potassium's grown his bones. Matt Crosby I had on this recently, and he had a really interesting chart, a heat map of where people buy and sell, and distilling it down, basically twice as much Bitcoin supply is bought at the top and sold at the bottom compared to bottom sold at the top. Only 0.32%, way less than 1% of the supply is bought in the bottom 25% of price action and sold at the top 25. Most of all this movement, it's the FOMO. Robin, you talk about the FOMO. Even if it's subtle FOMO, it's FOMO. Yeah. I always hear about it, and people are into it when it's mid toward getting peak or effectively peak. So that's just what it is. Anyway,
I can safely report that I'm in the 0.32%. At least in the past. Like that's my Tindicator, man. That's that little
Tindicator.
The Tindicator's kept me out of a lot of trouble. I'm going to share a screen again. This is the Bitcoin chart on the monthly.
What's the Tindicator saying now?
The Tindicator saying don't buy anything. I'll show you right now. This is the weekly chart. This is kind of where. So it's this yellow line has to be above the purple line. This is what is that? Let me make sure I'm saying it right. So this is the 9 EMA, right? So this is a 9-period exponential moving average, and this is an 18-period simple moving average. So when this crosses above, like, I'll show you my exact buy. Like right here, this cross is the one where I was buying. Actually, I bought a little bit before because I was just kind of vibing it a little bit because it'd been so long. But when this line crosses as well, so you have to have 1, 2, 3 crosses. The RSI has to be above the 50. The yellow has to be above the purple. Buy signal. This was right when I was walking around our little local jail there, Fritz, and telling everybody, you should buy Bitcoin right now. I can't promise you it won't go down to 12 because you can see I've got a fucking line waiting right there to tap. I said it might drop tomorrow, but I'm buying here. And so that is the little indicator that I've used, that I used back here to time this buy, time that sell, time this buy, and then time that sell. And so I missed all of this downside. Like I watched people go, oh, buy the dip, you know, like just get hammer fucked. I missed all of it, you know. And so here I was just like smash buy. I got to save all my pennies all the way down. I got to keep all my gains that I made from this little bouncy booncy boom. It was kind of a little chop in and out here. But yeah, this was the one big one where I've got the receipts where I said I was a bottom buyer. And you know, but
Are
if
you
you
actually selling at the top? Are you actually like getting out of the market also a little bit, or just
no, well, that was my previous method. Nowadays I'm just kind of a net holder as a general rule. But if you kind of look at where this chart is at right now, like you can obviously see we've got some very striking parallels to this little boom right here, the 2021 cycle, right? I mean, you've got a double peak here, similar, and you've got this massive drawdown, right? But that, like you'll notice, it recovered right here, and it kind of recovered here and then dropped. We've actually got a green candle forming here on the monthly, but this doesn't close for another 20 days, right? So we'll see if that ends up green or red at the end of it all. But the point being is, for if you're looking for an opportune time to buy, like this is not great. Like there's basic rudimentary market structure. You go, that's a higher high, that's a higher low, that's a higher high, that's a higher low. And then, oh, lower high, lower low, lower high, lower low. And you go, okay, those are not good signs. That means the market is in a declining, just as a general rule, it's declining. But you can actually invert this scale. And you go like, if you saw this chart, you'd be like, oh, hell yeah, that thing's about to rocket, man. Like I want to get in on this because obviously the market has hit the bottom and it's rebounding, right? But this is an inverted chart. So what this tells you is, oh, we've hit a top and now the market is declining. And it's not rocket surgery to kind of do this sort of stuff, but in terms of like timing buys where you can maximize your fiat, you know, returns in Bitcoin terms, like I think it's better to do this kind of thing rather than just like catch a falling knife all the way down, because you actually there is a fair amount of research that says smash buys tend to outperform DCA buys, right? If you can time them right. But as your chart showed from what's his face, Fritz, like that almost never happens. Like most people, the heat map would suggest otherwise. Most people are top buyers and bottom sellers, not the reverse. So you got to have some structure and some discipline and some viable means to time your buys and sells is my theory. But
yeah,
what do I know?
The only thing I always say, and you might disagree with that, but I always tell people, if you don't have exposure, just get in a little bit.
Yeah. Oh yeah.
It's for me because it's unlikely. Like if you had like 126K or like 150K and we're at the top, you can easily say like, don't get in. But I think that getting in is still better than not getting in, even though like don't go all in anyways. Like even if we're at the bottom, like even if the buy signals are all turning green, you should not get all in the beginning, because you should get educated. You should get all of that. I have this thing where I don't do nice research if I don't have my foot in the door. If I don't own anything. I think I told you this, guys, before. When I first researched strategy, the first thing I did is buying 10 shares of it or something like that.
Right.
Because it was like, I know I will not get off my ass and research this asset properly as it is deserved to be researched if I don't own at least a little bit. And my most successful orange pillings in my friend circle were where I told them, get it a little bit, like get an amount into Bitcoin that would hurt to lose, but doesn't kill you if you lose it. So like, I don't know, if you own, I don't know, 50 grand in your net worth, put in 1 grand. Like it would hurt you, but like, who cares if you lose it? And this gives you enough incentive to like get in, research about it, learn, study, all of those things.
Yeah. Skin in the game, like Johnny said.
Skin in the game, get skin in the game, and then like then you can ride it out. And man, I have to get more intelligent with my bias, that's for sure, because I haven't been at all. I also discovered this year the first time that I should have some buffer, like I should have some cash buffer, not have everything in Bitcoin.
Yeah.
I started doing this also in December, which is now really helpful. But it's you learn when you're in the market, and I hope that people are learning from it and not getting frustrated, because I see a lot of people getting frustrated and like they're buying Bitcoin at 110K and then they're like, I don't like it anymore. It's going down. I was promised it goes up. I listened to Samson Mao. I thought it's at $1 million right now. Like people are getting frustrated. That's so I like your approach a lot, because it gives them a more realistic thinking of like, is it actually a good time to get in the market? I just always anchor first, like get some exposure, like, because you never know what's happened. Like, even if you're like, because like it's unlikely, but even if we are at, let's say at 150K and we are kind of at a top again, and we are kind of saying like, you shouldn't buy right now. What if at that point Apple announces to convert 25% of their balance sheet to Bitcoin?
Right.
Like all the models are breaking, all the things are like, we're going to 250, 300, 400K, I don't know. Like it's like there's always this back of the mind of like, if you don't have any exposure, get some exposure, then learn, and then you can more timely get into the market and out of the market as you progress, being a Bitcoiner and a trader in this, or not a trader, but like just an actor in the market.
Yeah. Well, I think it was Mandrick. I mean, I think what you're talking about is great. Like, it makes a lot of sense, dude, because, you know, to be fair, like, it's unlikely that people will learn about something without having exposure to it, you know? So I guess there's like merit to that kind of idea. I mean, there's a ton of merit to that, right? It's just my experience has been when people get into something and then they lose money on it, they tend to not want to research it more. You know what I mean? Like, just get off zero, right? Because I used to just tell people, just don't be on zero. But I'd tell them, like, just get $50. You know, like, don't spend a lot of money on this until you understand what the hell it is you're doing and why. But for all the people that I was telling, like at 16.8 when I was buying, I was like, buy. And nobody bought at 16. Nobody bought at 24. The handful started buying at like 40. And I got one guy late at like 60-ish, you know. So the thing is, they all got to experience number go up, though. Every single one of them. They went, oh my God. So, you know, like if you 3x on your $1,000 investment at 40K, like that's pretty good, right? Like people go, hey, shit, dude, I put $1,000 into this thing, and then, you know, 6 months later, it was worth $3,000. That's sweet. I like that, you know. So for them, I think the likelihood of them actually researching what they have is much higher than someone who puts $500 in a thing and then it's worth $100 6 months later. They're just like, you're a dick. I don't like you. I don't know why I ever listened to you. You're a moron. I knew this was like baboon magic internet money. I knew I shouldn't have done it. Everyone told me I shouldn't, except for you. So you're the problem, not Bitcoin, not the investment. It's like, it relegates you to a place of like vapor signal. You know, you're useless to them after that.
Yeah. So, all the hard orange pilling people have done for the past 8 months or so it's probably turns people off.
Oh, dude. Yeah. Like here, jump into this thing where you can lose money. It's like, I can lose money by myself. I don't need any help to lose money, asshole. You know?
Yeah, at least I could have gotten some stuff for this. But yeah, it's been a ride, but there's a lot of feeling that like we're at or near the bottom. And one of the charts,
I have no indicator of that whatsoever. I have nothing that indicates we're anywhere near a bottom. I have all the structural indicators that we've got more pain to come.
Okay, well, here's a chart that Matt showed where he looked at the 200-week moving average, where based on a number of factors, where Bitcoin is moving into long-term wallets, structured finance setups, corporations or governments or whatever. There's loss. There's a floor that has sort of been steadily rising here, that rarely does the price dip below that. And we're kind of just there now. Now, could we hit 50 or maybe in the 40s? Yes. But rarely does Bitcoin drop below this 200-week floor. And he showed this as an indicator that we're kind of like at what traditionally has always been a good hard floor. So,
well, people say that, but if you look at a longer chart, you go, oh, maybe that doesn't hold as much water. I'll share again just because I love shitting on astrology for men as often as I can.
That's what we called it. It's
so if you look at the weekly chart, you go, yeah, does that? This is the red line is the 200-week moving average, right? But that's a 200-week moving average, right? And so keep in mind that Bitcoin is a very relatively young asset class, right? So as you can see, they have this model. Sailors talked about it. He goes, well, it tends to bounce off the 200-week moving average. There's a bounce. Obviously, here we dip below. That's COVID. And then right here was, everything was breaking down, and then FTX. So we actually dipped way below the 200-week moving average. But if you go to a monthly chart and you go, well, hey, what's the 200-week moving average doing here? Or the 200-month moving average? You go, that's the 200-month moving average, that little blurb right there. So here's a 50 months EMA. So that's about 4 years. And you go, oh, so we happen to be tapping the 50-month exponential moving average. But the 100-month moving average, we haven't even come close. And so you go, well, which one is the real floor? Because it's broken this floor. If it's a floor, it shouldn't be broken. So that tells me that someone who's saying, well, it's historically been a floor, except for all the times it wasn't a floor, but it was close to the floor. Like my foot only went through the floor a little bit and then it came back out. So it's still a good floor. I go, that's not a good floor. If you were walking on your own kitchen and your foot occasionally fell through the floor, you'd go, is this a solid floor? You go, no, because my foot keeps popping through it once in a while. That's no good. But you could go, well, on a 100-month moving average, looks like we got all kinds of space to go. But if you just draw a simple trend line, which I did here on the monthly chart, you go, well, where does it look like we could possibly dip? Because if you just go from here to here to here to here, you go, if you're tracking the lows and you got you go, well, a straight line view of this thing on I don't even know if this is logarithmic or not. No, it's not. But if you go to a log chart, you go, well, what are we looking at now? You go, well, maybe this is your actual floor, maybe your 100-month moving average, and we just haven't seen what financial pain looks like until we hit that thing. So there's a lot of things to consider when people start parading their little charts around, or they start going, oh, see, this is the reason why everything, blah, 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 blah. It's like they're all seeing dragons in clouds on some level. And it's not to say that it won't hold this time, or the 200-week moving average won't be the thing, or we will or will not dip below it, or we'll tap it and then go back up, or we'll go below it, or, like nobody knows what the future is. And like Robin said, if Apple and Tesla and Twitter and Google all come out tomorrow and say, hey, we've all looked at this Bitcoin thing, we've all decided to smash buy Bitcoin right now because we think this is the best thing ever. Well, guess what's going to happen to the price? Like it's going to, like all those models go out the window, right? So like there's an old saying, all models are wrong, some are useful, and most of these aren't even useful, I think, for long-term planning or strategy. They're pretty useful for the people to put them out there because they get a lot of traction, they get a lot of attention, they can sell a lot of trading courses, they can sell their little proprietary this, that, and the other thing. So it's a business for them. It's not like a to help you thing, it's a to help them thing. If they can make it believable enough, they can get people in just going, hell yeah, I'm a Virgo, and I know that according to my star charts today and according to the, trading charts tomorrow, I can buy Bitcoin right now and be rich in 12 months because trading guy said so,
Yeah. And notwithstanding the seeing rainbows in power law.
Don't even get me started on that shit.
I didn't even bring up power law.
You just did.
Oh yeah, I just said it, but yeah, I didn't even bother bringing it up to Matt Crosby. He's just like, because he spent some time with Giovanni in Prague and stuff, and it's like, you keep having to modify that model.
Weird, huh?
I know. It looks great once we've cleaned it up again, but
yeah. Once I just change all the fitment criteria, then it fits great. It's like, oh, cool.
But wouldn't it be nice? I think there remains this potential for face melting upward craziness. And granted, there's going to be fundamental reasons that like big companies project, we are going in on this. Nation states say, okay, Bitcoin reserves, and we're doing this. And so then that floor goes up in a way, as well as all that froth on top of it, which is the madness of face melting omega candles, which that can happen. So
good. I don't know. What do you think, Robin? Are we going to have face melting God candles?
64K to 1 million.
I think it's a little less likely. Like it's possible, but I also think that there are humans involved, and humans have dreams and have things in life that they want to have. And so if you get in now, let's say it's 64K, and you hold on for 5 years, and we had something face melting like 2 million or something like that, you probably have sold some along the way to buy yourself a better house, to buy yourself a better car, to retire yourself from work, retire your partner from work, get your kids in a private school. Like there's so many reasons to spend money if you hold something that 10x's, 20x's, 30x's. Like at some point there will come something, and you're like, I want that. That is really cool. And so the higher the price goes, the more the incentive grows for people to exchange those Bitcoins for something else. I'm not saying they're selling it to buy gold or SpaceX or whatever. They just maybe buy a house. They maybe just say, hey, I want to put like 400K away from 2 million that I made, so I can live my life comfortably and don't have to worry about a crash, don't have to worry about the Bitcoin market, and just like live on those 400K for the next 10 years and not have to worry about anything. So it's like, I think that's kind of the main argument for me against those face melting upswings that might happen or might not happen. The more realistic situation is that we go up a bunch and then go down a bunch again, but a little bit less down than previously. Yeah. And like if you think about 64K, because it's not that long ago that 69K was the top of Bitcoin. It's been about 5 years. Yeah. And so if you think about the top that we're like, wow, it's so high, like Elon Musk gets involved and all of that happens. Now it seems to be like, not the bottom, but like around the bottomish area. Now like people are depressed with 64K. And 5 years ago, people were celebrating, popping champagne bottles and like doing all, like buying homes and leveraging Bitcoin, all of those things. It's the same price. I mean, the market cap went up because we are now having a little bit more Bitcoin, but it's basically the same thing than like 5 years ago. So it's also perception, and that's the second reason why I don't think like huge God candles probably don't happen. It's the perception of people thinking when someone gets into Bitcoin at 64K and he's convinced 64K is a cheap price to pay Bitcoin, he will be like, oh, it's 604K now. So why should I buy? Like if someone gets into his entire net worth, let's say he has 120K and he buys 2 Bitcoin with this, and he has like an average kind of a salary, and he can add maybe like $500 a month to Bitcoin. Right now, that still buys him here and there a little bit more. Right. But if Bitcoin is all of a sudden at 640K, he's like, that $500 a month is like a drop in the bucket. That like really doesn't do anything for my overall stack. So maybe I buy something new, exciting, that like is smaller in relation, even though if maybe Bitcoin has a higher upside. So there's so much human psychology to like investing and those cycles. I have a very hard time believing that we'll just like rip our faces off and go, let's say, from 64K to like 6 million. I don't know what a face melting candle, like what qualifies as face melting, but it's probably not as violent as some people might want it to be.
Yeah. Well, I agree, dude, 100%. The thing I would probably add to that is like, I think a lot of Bitcoiners, especially in the Knott's BIP 110 camp, still think it's like 2017, right? Like I think they're literally stuck in 2017 going like plebs matter and we're all here together and we're making Bitcoin, yada, yada, yada. I go, you have massive institutional buyers of Bitcoin now, and they don't look at Bitcoin the same way you do. They don't go like diamond hands, hodl forever, blah, blah, blah. Like that is not in anybody's portfolio narrative, right? Like, fuck yeah, diamond hands, dude. Like I'm going to diamond hands my Tesla stock. I'm going to diamond hands my, if it goes to zero, I don't care. I'm going to ride it all the way down. Like they don't. Their portfolio rebalance constantly. And if you have institutions rebalancing their portfolios, because like, I don't know if you probably know Rand Nooner, right? The shitcoiner podcast guy, pretty popular. He runs a popular shitcoin podcast, or at least it was a few years ago. I don't know. But that guy was a huge investor in Terra Luna because he met Do Kwon early and he got like a bunch of Luna tokens for like 10 cents or something like that, right? So he bought like 1 million Luna tokens at one point, or whatever it was, of 100,000, or just he had a huge bag of Luna tokens. And he used to put this chart up on his little crypto, shitcoin show where you go, oh my God, Luna has blown up so much. Now it's like $150 a token or whatever. Like it used to be like this little itty bitty sliver of my portfolio. Now it looks like a Pac-Man, right? Like his portfolio is like 80% Luna, but it was worth like $120 million. And people are like, you need to divest some of that Luna, dum-dum. Like, you're going to get fucking wrecked. And he's like, yeah, I should do that. But he was even on the channel talking about, oh, I should name my kid Luna because it's such a great token. And so obviously Luna didn't work out as a project. I'm pretty sure everyone is familiar with the Luna collapse. And so that guy lost 9 figures overnight, like in 2 days. He lost $120 million. Like he just got absolutely wrecked. But he got wrecked because he didn't rebalance his portfolio, right? So if you're like, John Q 401k investor who's got some Bitcoin in an ETF because his financial advisor said, hey, you need to allocate 1% to 2% of your portfolio to Bitcoin. And here's the BlackRock ETF. You can just do it that way. And he goes, okay, great. And all of a sudden Bitcoin moons to like 250,000. That 1% of his portfolio suddenly becomes like 6% of his portfolio. So the first thing his financial advisor does is go, you should sell some of this shit and rebalance your portfolio because you don't want to have this much exposure. Blah, 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 blah. You need to divest this. You need to put it into Tesla. You need to put it into the Dow. You need to put it into Johnson & Johnson Band-Aid stocks, right? Like you need something more stable that pays dividends and blah, blah, blah. And that guy's going to sell. And every single person in that ETF is going to sell. So you go, oh, so we potentially have a float of a few million Bitcoin. They're going to be rebalancing constantly as price goes up. So I think that volatility that people are familiar with from 2017 times and 2020 times, I think they're going to get a rude awakening when they realize, like, oh, the institutions are here, they exist, and they have massive exposure to Bitcoin, like way more than the 0.75 Bitcoiner who's got, you know, a little self-custody wallet somewhere. And they're going to be actively moving those units around. So the likelihood of seeing like a 1 million spike, like I think that gets sold the second it hits that, right? Like every portfolio manager on planet Earth goes, nope, we need to rebalance all of this shit. Yeah, looky there.
We're talking about Terra Luna. I just have to mention it. I don't know how fun, like for me, it was very fun when I saw that, because it's like Sol, Terra, Luna, like Solana, Terra, and Luna, and that's like the new the new model names of ChatGPT, of the 5.6 ones. So, sorry, I just wanted to bring that up.
Yeah, way to go, OpenAI.
Yeah,
like way to pre-announce your bubble.
Now just imagine that. So that Dow chart you'd shown earlier, Daniel, imagine if the shift around where people put their time and energy, their money, their store of value, instead of being the Dow or whatever, imagine if that was just the money, or it was, instead of being investing, it was considered savings. And so you could save your, you know, I know the word money doesn't mean what we think it means, but imagine if people think of saving your money. What if you were saving your money, store value, and it wasn't the Dow, instead it was Bitcoin, and it was a similar chart where it's like, well, it's for savings, and but instead of being all this gamified stock corporate stuff, it was simply Bitcoin. That would be, I could see that.
I think it'd be great. I don't think people can fully grok what that means, though. That's the problem, right? Like, I don't think anybody but Bitcoiners think Bitcoin is money, quote unquote. I don't think anybody but, and by Bitcoiners, I mean the hardcore tranche that posts on Twitter. Like, outside of that, like
us.
Yeah, us. Like, we're the only people that refer to it as money. We're the only, like, everyone else thinks it's a speculative asset. Full stop, period. Wall Street thinks it's a speculative asset. Like, John Q. Public thinks it's a speculative asset. Most of John Q. Public thinks it's a scam still. So, you know, how do you convert people from this thing is a scam to this is where I should put my savings energy? You go,
Yeah, when I was reading and thinking about praxeology earlier this week, I had this depressing moment where when I really looked at the landscape of the humans that I know, and the nature of their thinking about a lot of things, let alone Bitcoin. It's just it's not even a gap, or that they've got a lot of learning and catching up to do. It's just another planet. The praxeology of their human incentives, their human action. It's absolutely, you just say it's divorced from all of this stuff. It's another reality. It's a completely other reality that I think really, honestly, most of them, all the orange pilling and things aside, unless they're really interested and curious and for some reason in their lives care or need it, they can't think about it. They won't think about it. Right. They'll hear about it and be polite about it, but they just won't. And I'm thinking, well, that's a chunk of people. And I came to this thinking just a couple of days ago, like, I think that's like, I want to say 99% of people. Yeah. Like everybody, just say nobody thinks of this stuff.
I would actually probably put it closer to 80%, but continue.
80. Okay. 80% of people just, I don't want to say incapable, because we all have that potential inside of our hearts. It's there. It's just circumstances and life and whatever. But to be honest, really, people aren't thinking about it, won't think about it. The need is not there. The situation is not there. At this point, even Gen Xers now, Gen Xers being like the new boomers, you're looking at thoughts around retirement and not risk.
Right.
And so just not Bitcoin, you know, at what they see as risk. So, because they don't understand things. So I just kind of was like, well, it is what it is, but we'll see time preference wise, like we're early is sort of the thing.
Yeah, I guess so.
Is there an earliness to it, or well, I think of your book. Well, we can talk about that too. If anything about exciting news there, but
well, it's partial news, I guess, right? Like it's not negative news, so that's a good start, I guess. But yeah, it sounds like the book is moving along in the background there, just waiting on some further peer review. But I had a nice communication from the editor, Paul Graves, so I'm hopeful. I don't want to jinx it because there's still until your ink is on the contract, it doesn't mean boo, right? Like all the good vibes in the world don't equate to a contract, but yeah, but in terms of like what the level of understanding that it requires, and that was sort of my theory about from the last book, right? Is like it doesn't really matter if most people get Bitcoin or not, as long as big economic players do, right? Because
Right.
I think that's going to be the thing that improves the lives of the plebs, the worker bees of the world, far more than like if Walmart can figure out a way to get you your Twinkies and Ding Dongs for 10 cents less each week, like that's a win for the millions and millions and millions of consumers of Twinkies and Ding Dongs, right? If Ford can figure out how to make a car for 20 grand instead of 40 grand, that helps millions of consumers, right? If these companies can compete on quality and price and things like that, rather than trying to chase debasement, then the world gets better for everybody underneath that chain.
Yeah.
Houses get cheaper, et cetera, et cetera, et cetera. Not to mention, if you have an asset, like the 20% that are motivated are the people that like have rental houses and run small businesses and run big businesses and things like that. They're thinking about money very differently than the average Joe plumber or carpenter or whatever, right? Because they have to. Joe plumber just goes, well, I just need to make a little more money. I'll go take a second job. Like that's all they think. They don't understand like, oh, well, because of Fed policy over the last 20 years, and because of the financial crisis, and because of the amount of debasement currency unit by 10 to 12% for the last X number of years, that's why I need to take a second job. If I would just find the right asset to protect me from that, then I wouldn't have to work the second job. Like that chain of thought is like so far above and beyond what your average plumber guy is thinking about as a general rule. So you go, well, who is thinking about that? The people that supply the plumber with all the shit he needs, and the people that supply him with his food, and supply him with his vehicles, and supply him with his tools, and supply him with his house, and et cetera, et cetera, et cetera. If all those things become cheaper because they're holding Bitcoin on the balance sheet in some way, shape, or form, and you go, well, that plumber's life got better, and he still doesn't get, he just goes, oh, you know what? I don't think I have to work that second job anymore. That's kind of nice. Huh. Neat. Okay,
Yeah.
so well, like what game are we going to watch this weekend? Like I can actually buy beer for the party this weekend. That's great.
Yeah, it's easy for me to think about it from a pleb perspective, how plebs are affected, but that's the thing, these giant tides that shift, the great realignment, the world will change along us as we are focused on our other human concerns, and people will notice the world change and maybe be aware and think of Bitcoin, but they'll see things change. They won't even know why.
Yeah.
They'll just see that things are different and they won't know why.
Right.
People hardly pay attention to things in, say, even the stock market, really, except for the big ones and the big moves. And then what's that mean? What's that news about? But none of it means anything to them. It's just astrology.
Exactly. Well, I mean, that's like, Robin's been looking in Stretch a lot, and I think if you step back for a minute and quit, like if you take off your like Bitcoin maxi hat for 10 seconds and can just like look at the world with an empathetic lens through the eyes of people that don't understand anything that you're ever saying ever. And you go, hey, well, here's an instrument that you can get 11% interest for life just for putting your savings into it. They go, what? I mean, hold on a second. So I can just buy this thing and the guy's going to pay me an 11% return forever? Yeah. So do you want to do that, or do you want to go learn about self-custody and Bitcoin and blah, 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 blah. You go, what do you buy? Like me is like, if I didn't know anything about Bitcoin and I heard about that, the first thing I'd think is it's a scam. The second thing I would think is like, well, I want to look into it. And the third thing I would think is like, oh, this looks like it might actually work. I'm going to buy some of that. Like that would be the chain of custody thought in my head of just like, maybe, oh, interesting. Oh, that might work. Okay, I'll take a flyer on that. And then after 2 or 3 years of getting 11% interest, I would be going more and more into that instrument, right? And that would be exactly what you're talking about. Can I just do some savings, just do something simple? Can I just go open a Robinhood account, buy some stretch, and then just get dividends? Yes. Okay, I want to do that. Well, but don't you want to take self-custody and have this really volatile asset that can go from like 16,000 to 120,000 and then back to 60 in like 2 years? No, like, why don't I want to do that? That doesn't make any sense at all. That sounds like madness. I get 11% a year, right? Yes. So you will be exactly at the pace of debasement. So you're never really going to get ahead by saving, but you're not getting killed by debasement as a general rule. It's better than gambling in the stock market because all those companies can go bust, but this thing will just pay you, dude. Don't you want to do that? It makes sense. But Saylor pointed that out at Prague. He was like, people just want, I just get money for free, right? Yes. Okay, cool. Here you go. This is the instrument I've created. I don't know. I mean, tell us about Stretch. You know a lot more about it than I do, Robin.
So there is a lot of
there's
a lot of nuance. There's a lot of nuance to this topic. Like first of all, I think what Saylor is doing has the potential to be huge, like absolutely tremendously, massively huge. It's also a very big problem in the sense of if he succeeds with that, I think Strategy will be in the top 3 companies in the world. Like no question about that. The question is, will he succeed with that? Because what he is basically wanting to do is implement a new savings account that almost everyone in the Western world can access and now pays already 12% actually out, and that paid twice a month. So as twice as much as salaries in the EU, and I think like as much as salaries in America. I think you guys get it like bi-weekly salaries. We get it monthly. So like if he can actually pull it off to have an instrument that has little volatility, because it has volatility, it will never have zero volatility, right. But an instrument that has maybe 2% volatility, 5% volatility, maximum like 6-7, and delivers constantly a paycheck to you directly in your Robinhood account, in your Fidelity account, in the accounts that you already have. And maybe if this is successful, maybe more new banks will automatically push that thing in. Like, there's another thing. If that thing is actually successful, let's say it keeps 5% volatility and it pays bi-monthly, what holds a major bank back of giving people, instead of 12%, just like 6% or 8%, keep it stable? Like the number they see in the bank account is always
never changes,
$100, ever, always like what they put in there, and they just bank 4% because they can easily stomach a volatility in a drawdown. I don't think this will happen in the next like 1-2 years, because the instrument is like still too young and Bitcoin is too small, strategy is too small, they don't have a good credit rating, all of those things. So right now it will not happen. But what if Strategy improves the credit rating? By the way, that's the reason why they sold Bitcoin. And what if they actually, what if Bitcoin is not a $1-2 trillion asset, but a $20 trillion asset? And they have now, let's say, not 800,000 of those, but 1.2 million of those Bitcoin. They have a huge stack of assets. They've proven they can sell the Bitcoin without tanking the market. They just sold 3,000 Bitcoin, and on that day, Bitcoin went up. Like they just proved that Bitcoin is a very liquid market, that Saylor can just sell Bitcoin and it doesn't affect the price, because if it would have affected the price, it would have gone down drastically and not went up a little bit. And so they trained the market. They proved that the Bitcoin that they have is actually worth something. if you look at the last credit rating they got zero zero acknowledgement for their Bitcoin on the asset side. Of course, if you have whatever, like I think 6 billion or 4 billion that they have left in debt with the convertible notes, and you have a monthly dividend that you have to pay, and the only thing you have is Bitcoin and a small operating company that cannot cover the dividends, and you value then the Bitcoin as zero, then you have a company that looks like trouble. And then you have bad credit ratings. But if they actually improve, the Bitcoin is worth something, they can use it, and that's the whole reason why they sold it. Otherwise, they wouldn't have needed to do that. Then all of a sudden, you have a company, very strong balance sheet. They retired earlier a little bit of the debt already. They want to be debt-free 2029. Then they only have the dividend, and the dividend is not something that they have to pay. Like I think a lot of people are not like, if we now look from a strategy perspective, they can just retire that whole preferred thing, and they don't have to pay anything back. It's a capital stack and not a debt instrument or anything like that. It's not retiring. It's not coming due. It's also not. It doesn't have a margin call in it. That's the whole thing that people are, oh, it's a debt spiral, and now they have to sell Bitcoin, and now they will be in a debt spiral. No, like there's no margin call. It's not like the average Joe borrowing against the Bitcoin at 120K. Bitcoin falls to 40K, and all of a sudden he has to sell because he has nothing else to do. It's a very different market from that perspective. And so I think I rambled a lot of things, but my main point is they are building something very big, something very challenging, something that has, when you look it from 2020, a very low probability of working. When you look at from 2026, a little bit higher, but still a low probability of actually working out. But I'm betting a little bit of my money that they might succeed with it. Not a lot, under 10% of my whole portfolio. If it works out, it will be huge. Like this will be like a massive giant. In America, we will have debates of nationalizing strategy because it's too big for a private company, and all of those. Like, leftists will want to get it into the government arm and want to make it smaller, and will cut it down. Like it will be just huge. But the question
never even
is,
thought of that.
Yeah, but the question is still like, can they pull it off? Because it's not an easy problem that they're trying to solve.
Yeah. Well, I mean, if they do, like your point about the bank savings thing goes precisely back to my theory about like how the world gets better without anybody necessarily having Bitcoin in a wallet somewhere. Like if you're Joe Plumber and you can go to your credit union where you've been banking with that credit union for the last 40 years, and you know, they help finance your house, and they help finance your car, and they help put your kids through school. And now they have this CD that pays 9% per annum. And you go, holy cow, man, like every other bank is offering like 1.5%. Well, I would love to make 10% a year on my, or 9% a year. That's actually pretty good. I feel pretty comfy with that. They're still technically just right behind debasement, right? Like, but I don't think you'd feel it. Like if debasement were really 2% a year, you wouldn't really notice. Like you could comfortably save at a 2% debasement throughout your lifetime and have enough money at the end that you're not going to run out, right? It's only when they accelerate to 5, 6, 7, 8, 10, 12% that it starts becoming real painful for savers. But a 2% rate is kind of like, meh. So if you're collecting 9 and the debasement rate is somewhere between 8 and 12, you're going like, oh, well, I'm kind of keeping my head above water. So that means every penny I'm putting into savings actually is being saved. Like it still has its purchasing power at the end of the year because my awesome credit union has this great CD. And what do I have to do to research it? Well, I walked in to make a deposit and they said, hey, have you seen our new CD? It offers 9%. And he went, oh, I'd like that. What do I need to do to sign up? Just take some money out of this account, put it in this account, and then you're done. Oh, I don't need to call a broker. I don't need to read a prospectus. I don't need to unpack any. Nope. It's just a CD, just like all the other CDs you bought, except instead of 3.5%, you get 9. I'll take it. Great. Cool. It's FDIC insured, right? Well, not really, but
yes.
outside that, but kind of. I mean, we're all backstopped, so you'll be fine. Okay, cool. Well, it's only a year, right? Yeah. Okay, lock up your money for a year. We'll go buy Stretch. We'll pay you a sliver of what we're getting, and then we'll make money. You'll make money. Everybody's happy. But that plumber's life just got a lot better, a lot easier, without knowing Bitcoin was involved in any of that. And I think that's going to permeate throughout the economy, throughout the global economy, not just like, so there is the self-sovereign, protect your freedom at all costs and take your sovereign right to sovereign property. I agree with all of that 1000%. I think that is the best possible way you can utilize the Bitcoin that is available in the world right now, because it gives you a power that no other rulers have ever had ever in the history of mankind. But if you're not there, and if Bitcoin permeates throughout the economy in that kind of way, where like companies are holding on their balance sheets so they're protected from debasement and they can withstand the volatility because they're actually pushing products out, or because they're offering a service and they can withstand volatility, but they can keep their balance sheet in order because Bitcoin's on it. Or there's like banking instruments and credit instruments where you can actually get returns like dividends or savings or yield or whatever it is just from your bank, because the bank is using these complex arrangements in the background. You go, that's a win for everybody across the economy. Every single economy on the planet benefits because Bitcoin's part of that ecosystem. So I don't know, like I'm kind of bullish for it. Like, I don't know if strategy will ever get to a place where like the U.S. wants to nationalize it. I think they would face like significant legal challenges just from nationalizing a private company. Like, I don't think that's going to fly fucking anywhere. And especially if you're like a multi-trillion-dollar company that has like all the legal resources behind you, like you'll just start buying senators at that point. You go, nope. We're just going to change that rule. Like, I don't care how many, but all you got to do is feed the blue hairs a bunch of money and they'll go away, dude. Like, you just go, oh yeah, you want us to donate to your left-wing purple hair fucking dinosaur drag hour? Great. Well, here's $1 million. Go fuck yourself. And they're like, okay, cool. We won't protest you this week, So
here's a crazy scenario here then. Bitcoin's season turns. Bitcoin price goes up. Strategy is in the top 3 of all the wealth. Survived it all through the fires, and it's just could do anything they want. Anything in the hell they want in the entire world. Mamdani turns New York around and all the angsty blue hairs. He runs for president. We have a new president, and damn those wealthy people. Attack number 1. Where's that wealth? And then so what can they do? What do they try? I can't. There are things that have happened in history that I thought, well, that could have never happened, and then and here we are. But can you imagine? Purple dinosaur drag hour. I know. At the library.
I mean,
bring your kids.
I also don't think, by the way, that like strategy will be nationalized, but I think that strategy will be so huge that there will be debates around that there will be like people like suggesting that. Probably, I don't think it's possible. I hope not, because it would be horrible for the economic. Like, it would be horrible as a signal from the USA to all the entrepreneurs and all the other people, like, just come here and do your things and pay your taxes here and build your stuff here.
And if you do too good, we're going to nationalize you.
Yeah, like that. It would be horrible. Like, there has to that a lot of political things have to change for that to be happening. But that was my point, to just like make like they can become like a huge player if they can pull it off. And Saylor is very smart, because I've thought, like, why is he pushing his competitors so much? He is actively promoting the Strive people with Seda and the Metaplanet people. He's giving them a platform. He's retweeting them. He's like, go to them. When Seda announced the daily dividends, he's like, that's the most impressive story he's ever seen, like all of those things. So he's not only accepting competitors, he's literally giving them a stage and pushing them. And I thought to myself, like, why? Like that seems weird. It's like MicroSeed saying, hey, go to that competitor and that competitor and that competitor. They're like, are really awesome devices. Yeah, we do our things, but they are awesome.
Yeah.
And I thought to myself, like, why does he do that? And I think slowly, I understand that the thing he's trying to do goes against something very big in fiat. Like if the banks and the central banks look at what strategy is doing, they're like, is he just trying to be the new central bank? Like, is he just trying to do a similar thing here? And so I think he wants to put his thing on more shoulders. I think he wants to be not the only player that is in there, and like is so like that his company is the only thing that potentially big banks and the fiat industrial complex could attack. Because my biggest fear was when I realized what he's trying to do is like, oh, so he's basically attacking the traditional financial instruments because he's kind of doing the same thing with Bitcoin. I think that's also the reason why he's working with all the banks, with the neobanks, with Robinhood and all of those people very closely together. He's meeting with all the banks because he's like, I cannot compete with them. I have to integrate with them. He cannot just say, hey, I crush you guys because they're huge. He's like, let me be part of you guys. Let me, it's not just me. There's a lot of different companies there. And I don't want to crush you, not at all. Like Chase.
I want you to blossom.
Yeah. Exactly. I just have an instrument that might be interesting in one of your portfolios, and you can give some value to your customers. So he's very smart in that sense of knowing you cannot come into something and go with the sledgehammer like, I'll destroy you, and I'm the only one doing that. He's like, no. Let's lift up the whole thing. Let's lift up all the competitors, so we as an industry are stronger. And let's not fight the banks. Let's not be weird on Twitter and all the podcasts and say like fiat has to go down. Like let's burn those ships and all of that. He's very nuanced with those topics, and he's like, let's integrate. Let's do this. Like he's talking with the banks, so he's very smart in getting into this fiat system, and it might just be the best Trojan horse into the fiat system that we've ever had, if you think about Bitcoin and fiat as two separate systems.
Yeah, I agree, dude. Like I think he's doing this very cleverly, and the thing is like the idea that you're gonna break the fiat system and all that kind of stuff. Like I love the sort of passion behind that idea, but it's rooted in some ideas that just don't withstand scrutiny, right? Like, we just want anarchy, like what is it, anarcho-capitalism? You go, that can't happen, dude. That doesn't work. And for people get in a bunch if I say stuff like that. They go, but because the contract and we should be voluntary, this and that. It's just like, dude, just shut up for a second. Like, think about this. Like, I challenge any human being on planet Earth to go organize an event of any kind without hierarchy. Like, go, hey, we're going to go do a barn raising. No one's going to lead. We're all going to just do it anarchically. And you go, really? Do you think you think you're going to put a barn up that way? Like, you can't build a doghouse if it takes more than one person without coordinating, without someone making somebody obligated to do something, right? So if you're a football team, you go, hey, we're just going to have a football team with no leaders, man. You go, good luck. You're going to be the last place football team forever. Like, you're never going to make that happen. That's not going to work. Like, someone has to call the play. Someone has to make decisions. Someone has to do that. And someone has to be obligated to follow those instructions, period. Try and run a military. Like, just go get in a fist fight. Go get 5-on-5 fist fight, and just one side, chaotic and doing whatever they feel like. And the other side is disciplined and trained and have practiced together and are functioning under a hierarchy. You go, which one's going to come out on top? Well, it's obviously the ones that have trained and are disciplined, right? Like, that's why disciplined armies routinely just ransack, irregular armies, because they don't have the coordination or the obligation or the resources to do that correctly. So the idea that you're going to exist in some magical world where, like, there's no rules and everyone's just getting along because they have contracts and everybody has their own guns and everybody's defending their own citadels. It's like, you're just a moron, dude. Like that world has never fucking existed. Like that can't exist. The second you decide you've got a citadel, someone's got to figure out who's going to organize the citadel. And guess what? You've introduced hierarchy, you've introduced a chain of command, you've introduced some sort of obligation into that thing. And everybody has to manage those obligations. You want to find a like a horizontal hierarchy, go be a hunter-gatherer. Like, there you go. It's like zero leadership in that tribe whatsoever. You're hungry, go get some food. That's your problem. You want some shoes, go make some shoes. That's your problem. You want to build a hut, go build a hut. That's your problem. That's like, it got nothing to do with me. I don't have to coordinate shit. If a lion shows up, they'll all group up and they'll get in a big huddle and they'll poke at it with sticks. But other than that, they're like pretty good to just kind of cruise around, do whatever they want without anybody telling them what to do,
So even as those powers and structures remain, if those obligations architecture changed, where the incentives, like anyone, fundamental rules have changed, and people can opt in or opt out more on their free choice, more or less, or you get, like, you think about it back in the day, like thinking about it in your book, you get okay, we need leadership. We got to have frameworks and obligations and things. But any leader that starts acting like a bully and an asshole, people aren't kind of stuck. They can just be like, no, thanks, bye, or beat them down or not participate. Yeah, perhaps the nature of all those, it's part of that realignment. It doesn't change sort of the basic framework of human actions and how we get things done, but it could shift the incentives, and then yes, it's still there, but it's better.
Yeah. Oh, that's my thesis 100%. Like, I don't think you get rid of this. I don't think it goes away. Like, if you legitimately had the US dollar collapse tomorrow and then the euro collapse the day after that and then the yuan collapse the day after that, everybody dies. Like, it's not like you go, oh, well, there'll just be a little adjustment period. It's like, nope, everyone's just dead now. Like, people aren't going to be able to eat. Your grocery shelves will be empty within 2 or 3 days. And then you're going to have to figure out how to make your cat food stretch for the next 6 months until they figure out how to get a new financial system going. And it's going to be tough. And people are going to be eating each other in the streets. Like, it's not like you just go, oh, well, we'll just keep everything going and we'll just like adopt this new. It's like, no, that's just not how it works, dude. Like, it never has, it never will, because it can't, because that's not how human action is organized. That's not, like, if you live in a society, you have an obligation to that society, full stop. Like, you don't get to have all the benefits of this without being obligated to do something to support it, right? That's kind of like group logic 101. If you all get together and everyone says, hey, we all need to work together to build this house, build this field, build this whatever, you're all obligated to help. You can't be the guy who's sitting around just doing nothing, because people will haze you and they'll beat the shit out of you or they'll kick you out of the group, right? If you're not pulling your weight. So that means at core, anytime you're trying to organize human action, there are obligations are involved, and how you move those obligations around is the basis for money. Not like, oh, well, we just need to trade. Like, you don't have to trade if you don't have obligations that are stacked on your head, right? So
yeah.
So I'm on a tangent now, I guess, but the kind of the broader point being is, like, I appreciate some of those notions, but I don't think it's a realistic view. And Saylor, I think, has a much more realistic view of the world we actually live in, not the world we dream about creating in some sort of fanciful theoretical ideal, right? And if you're going to exist in the world as it exists, which I think is the only way you can function as a human being, like, if you are walking around thinking gravity doesn't apply to you, you're going to find out real fast, right? If you're walking around thinking fiat doesn't apply to you, you're going to find out real fast. If you walk around thinking the government doesn't matter to you, you're going to find out real fast, Thanks, Johnny. I appreciate it.
We're here for the tangents every day. It's all about the tangent.
But the point I'm getting at is, like, if you look at someone like Saylor, if you watch his slide or his show from Prague, like, he breaks down what the monetary system really looks like, not from the view of like a guy who's trying to save his pennies every week, but from the view of like the entire system. And you go, yeah, it's not as simple and easy to wrangle as people think,
I was positively surprised by that presentation of his. Like I listened to a lot of his stuff because I'm now a shareholder of his company.
You're an owner, dude.
Yeah, I kind of have to. But I was like, he's probably not bringing up anything new, but he's like legitimately like something really like interesting, and like he breaks everything down and like in a very nuanced way. But I have some unfortunate news. I have to go.
Oh yeah, we should probably wrap up anyway. We're kind of at the
we're near time.
If you're wrapping up now, I'll stick around for the outro. Otherwise, I'm leaving.
Yeah.
Oh yeah. Hey, I should play the new. I need to make my own new ad, but oops, what am I adding here?
Don't play something we shouldn't be seeing on YouTube.
Well, I could play the little promo that you made.
Awesome. Yeah.
What the heck?
Johnny, it's always great to see you, sir. I really truly hope you're on the mend, man. I hope your hip's getting a lot better. I know that's just absolutely brutal to recover from. So we're thinking about you, man. We're keeping you in our prayers. And as always, thanks for joining us.
Yeah, absolutely. Glad to have you. Hope On the Mend is truly healthily on the mend. Should I play your video, Daniel?
Yeah, run it.
Gen 2. I was at the range, not to go on another tangent. I was at the range yesterday shooting out in the wind. I'm tired today, breathing some dust and licking my lead fingers and stuff. Yeah. But handling a bunch of firearms, we use Glocks, and it was like Gen 4, Gen 5, and so MicroSeed's got Gen 2. I like the Gen.
Yeah.
Genesis Gen 2.
Yeah, I'm gonna dig it too, man. Anyway, let's see this ad, Fritz.
Okay. Yes, I'll play this one. Thanks, Johnny. I'll play this and enjoy.
Look at that face. Oh my God.
Features of the MicroSeed Gen 2. Thanks, everyone.
Woo! Gen 2. Looks good.
All right. Thanks, man.
All right. We'll wrap it up here.
Yep. Good to see everybody. Thank you all for joining as always. And we'll see you next week.
Till next time.